Before we start, I just want to say thank you for being here. I recently launched this new channel and your support truly means a lot to me. Night falls. The light from your phone screen hits your face. You open a banking app. You buy a coffee. Money gets deposited into your retirement account. You order shoes online. Maybe you book a flight. Maybe you pay insurance. Maybe you're just buying groceries. And behind all of it, there's an invisible financial network most people never see. At the center of that network, the same names keep appearing, but one stands out more than the others. BlackRock. Not a government, not a country, not an army, just an investment company. But an investment company so massive, its influence rivals entire nations. And the strange part is this: most people still have no idea what BlackRock actually does, because modern power no longer looks like old power. Power used to be easy to understand. There were kings, emperors, dictators. Now power hides inside spreadsheets, inside ETFs, retirement funds, algorithms, risk models, corporate ownership structures. And once you start understanding that system, the world begins to look different. Because BlackRock doesn't manufacture products, it doesn't build phones, it doesn't produce cars, it doesn't sell fast food. Instead, it owns pieces of the companies that do. Tech giants, banks, defense contractors, energy companies, pharmaceutical corporations, media organizations, airlines. And at first glance, that seems normal. After all, that's what investment firms are supposed to do. But then you start noticing something strange. The same handful of giant asset managers keep appearing inside nearly every major corporation on Earth. A bank, a pharmaceutical company, a media conglomerate, a tech giant, and behind them, the same institutional investors. That's where the system starts becoming unsettling, because the entire mythology of capitalism is built on competition. Companies are supposed to destroy each other, fight for customers, compete on prices, battle for market dominance. But what happens when the same financial structures sit behind both sides? This is where the concept of universal ownership enters the conversation. The logic is simple. In the past, investors bet on individual companies. Now, giant funds own entire sectors at once, which means the goal is no longer for one company to win. The goal is for the entire system to remain profitable. And that changes incentives, because destroying your competitor may also damage another part of your own portfolio. Suddenly, the economy stops looking like independent battles and starts looking like one giant machine. And BlackRock became one of the largest operators of that machine in history. But the truly disturbing part of the story doesn't even begin there. The real story begins with passive investing, the most boring financial products imaginable: ETFs, index funds, retirement plans. The system looks so normal that almost nobody questions it, because people think they are investing independently. But trillions of dollars are quietly being centralized into the same financial reservoirs: teacher pension funds, government retirement systems, university endowments, insurance reserves, retail investors, all flowing into the same massive pools of capital. And the firms managing those pools keep becoming larger and larger. Technically, BlackRock doesn't own most of that money, but it manages it. And in the modern world, management can become more powerful than ownership itself. Because if you can vote the shares, influence corporate boards, hold private meetings with CEOs, pressure companies on strategic decisions, you don't need to own the entire world, you only need enough leverage to steer it. And BlackRock's leverage starts appearing everywhere. That's when people begin asking the uncomfortable question: why does this company feel so powerful, but ownership isn't even the most unsettling part? The connections are. Because once you look deep enough into modern finance, everything starts connecting together. BlackRock, Vanguard Group, State Street Corporation. The same names appear over and over again, and eventually the system starts feeling like a hall of mirrors, institutions inside institutions, funds connected to other funds, capital circulating through the same networks. That doesn't mean executives sit inside a dark room plotting world domination. The reality is more subtle and maybe even more dangerous, because modern systems no longer require explicit coordination. The incentives already push everyone in the same direction. If the financial system rewards consolidation, consolidation grows. If political systems depend on corporate money, corporate influence expands. If retirement systems continuously funnel wealth into giant funds become stronger. Nobody needs to be a supervillain. The machine runs itself. And maybe that's what people find most disturbing, because there's no single face to blame anymore. Modern power has become faceless. Then come the government connections. And this is where the story becomes even darker, because finance operates through something known as the revolving door. Former central bankers move into giant financial firms. Former regulators join Wall Street. Corporate executives enter government positions, then later return to private finance. The same names keep circulating through the same institutions, especially during crises. Think back to the 2008 financial collapse. Markets were imploding, banks were failing, the global economy was panicking, and governments faced a terrifying problem. Who actually understood a system this large and complex? That's where BlackRock's influence exploded. Because during financial emergencies, governments turn to the largest financial institutions for expertise. But this creates an uncomfortable question. At what point does financial expertise become financial dependency? Because when governments repeatedly rely on the same private institutions, those institutions stop behaving like ordinary companies. They become infrastructure, too connected to fail, too integrated to ignore. And throughout history, crises rarely shrink empires. Most of the time, they strengthen them. But now we arrive at the most cyberpunk part of the story, Aladdin, not the Disney character, BlackRock's enormous risk management system. And this is where the story stops sounding like finance and starts sounding like science fiction, because many analysts describe Aladdin as something close to an operating system for global finance. Banks use it, funds use it, institutional investors use it. Even some government-related institutions rely on similar analytical infrastructure. The system tracks markets, monitors risks, analyzes portfolio behavior, evaluates economic movements. And the unsettling part isn't the technology itself, it's the dependency. Because the more institutions rely on the same analytical systems, the more financial thinking begins to centralize. Suddenly, trillions of dollars are making decisions through the same logic. Modern finance slowly begins developing a centralized nervous system, not through force, through efficiency. Because efficiency is one of the most seductive forces in the modern world. Faster, safer, more optimized, more predictable, and over time, people become dependent on centralized systems in exchange for convenience and stability. Then you start noticing something else. Modern capitalism sells people the fantasy of infinite choice, hundreds of brands, thousands of products, unlimited options. But behind the curtain, ownership becomes increasingly centralized. Different logos, different advertisements, different CAOs, the same major shareholders. And once you see it, it becomes difficult to unsee, especially in industries like airlines, banking, pharmaceuticals, food production, media. That doesn't mean these companies secretly coordinate every decision together, but it does mean the incentives shaping those decisions increasingly come from overlapping financial interests. And ordinary people feel the consequences everywhere. Housing becomes more expensive, healthcare becomes more expensive, education becomes more expensive, food becomes more expensive, while corporate profits continue climbing higher and giant asset managers continue growing larger. That's when people begin drifting toward conspiracy theories, because they can feel that something inside the system is broken, even if they can't fully explain it. And because the human mind struggles to understand invisible power structures, it fills the gaps with stories, secret elites, hidden meetings, one-world governments. The truth is probably more boring than that, but also more dangerous, because modern systems no longer require evil masterminds. They only require aligned incentives. And in the modern world, incentives are often more powerful than individuals. Maybe the most disturbing reality of all is this: even if you never chose to participate in the system still pulls you inside it. Your retirement account, your insurance company, your bank, your ETFs, your investment funds. Even people who hate Wall Street often end up feeding the exact same financial ecosystem without realizing it. And as giant asset managers collect fees from massive pools of capital, the cycle becomes self-reinforcing. More money flows in, more shares are acquired, more influence accumulates, more institutions become dependent, and eventually the system starts resembling something ancient, not kingdoms, financial aristocracy, but maybe the quietest form of power appears through the media itself. Ask yourself something. Why do mainstream media outlets rarely investigate corporate ownership structures in serious depth? Partly because finance feels boring to most people. But there's another reason. Large institutional investors also hold stakes in media companies. That does not automatically prove censorship, but it absolutely creates systemic pressure, because media companies depend on advertisers, advertisers depend on markets, markets depend on investor confidence. Everything connects, and modern systems naturally avoid attacking the structures that sustain them, which means most people only see the symptoms: inflation, layoffs, declining purchasing power, housing crises, but rarely the invisible financial architecture operating underneath all of it. And maybe that's the darkest part of the BlackRock story, because this is no longer just the story of one company, it's the story of how modern power itself has evolved. Because power no longer needs tanks, it needs code, data flows, capital movement, algorithms. And while people still think they're living in the old world, the new world may have already been built, quietly, silently, embedded inside the system itself.